Hey everybody, just want to walk you guys through a very simple video. Hopefully it doesn't take too long. Um, Basically what we're going to be talking about is making sure you're able to reinvest your dividends, and I'm going to show you how to do that using Fidelity. I'm sure that if you use a different, brokerage account like Charles Schwab or E-Trade or something along those lines, I'm sure it's quite similar. It's probably not exactly similar, but let's hope that it helps you out in a little bit. But if you have Fidelity, this will be directly aimed towards you. We're filming this video in May of 2019, so if the user interface changes a little bit, I apologize. I recently just did a video on making sure you're able to automate your direct investments or direct transfers from your bank account. So I'll put that video in the upper right hand corner in a card right now. And what that basically is doing is allowing you to automatically move funds from your checking account to your brokerage account, your individual retirement account on a set month or day every quarter or month or what have you, so that way you can invest on a regular basis. In that video I talked about I would do a video like this, which is specifically aimed towards dividend reinvestment plans. Now you can make this very simple for yourself, and if you already have an individual brokerage account or Roth IRA, I think that it automatically sets you in to reinvest in your dividends. But if they are not and they're going directly into your, core position, which is cash, then this is the way you can update it. It's relatively simple. You just go to Accounts and Trade. You go to Account Features. And in this area, you're going to go to Brokerage and Trading, and you'll see that it says Reinvest Dividends, tracking cost basis, add margin, what have you. But we're going to open that up, and you're probably looking for Reinvest Dividends as a topic here. In this case, we're going to look at dividends and capital gains. We are going to, some of these items is blocked out, so I apologize if some of the screen cuts out a little bit for you guys. Basically, this is talking about dividends and your capital gains, how you manage or receive your dividends or capital gains distributions from your portfolio. And it can go into a little bit more. If you have mutual funds, I just read this today, or this How to Change Dividends and Capital Gains Distribution page. If you have multiple mutual funds, you can actually take the dividends from your multiple mutual funds. And let's say you have 4 mutual funds, you can actually take the dividends from all 4 of those and invest it into one particular mutual fund, which I thought was pretty interesting. I don't necessarily have an idea on how to do that. I was just reading that on that page. So if you guys know how to do that or you've done that, leave a comment down in the comment section below. I won't be going into that today because I personally have never done it, but I thought it was relatively interesting. Going back to actually reinvesting. So you'll see that we're looking at my individual brokerage account, all the multiple different positions that I have in there. My AT&T, AbbVie, Alphabet, Altria Group, BP Midstream, BP, bunch of different places in here. And what you're going to see is your dividends and capital gains, they follow one of 2 things. Deposit to your core account or reinvest in security. Deposit to your core account means, in particular for an individual brokerage account, means you have an F cash, which is basically just a regular cash, basically just like a checking account that you could have with money just sitting in there. If you get a dividend of, let's say, $15 from, say, AT&T, that's going to deposit that $15 directly into that F cash, which is basically just cash. But if you do something like reinvest in security, that is going to be automatically reinvesting, let's say, that $15 into AbbVie, or in this case, Altria Group or BP Midstream Partners. It's easy to update if you decide that a position is way overrun or something along those lines, like Icon Enterprises or the S&P 500. You think that it's way overpriced and you'd rather put it back into cash. It's relatively simple. You just go to this update and you can do a decent amount of things within here. It's relatively simple. You have 2 options. You can reinvest in the security or deposit to your core account, and you can apply 2 different things. All equity positions within this account, like in this Today account, in this individual brokerage account, you can apply that to reinvest all the securities or whatever you choose in this particular thing to apply to all the things in the account. Or you can do any future purchases, transfers, or deposits into the account will deposit to core account or reinvested security. I currently have it set up that all future things that I purchase will automatically reinvest. So that's why you saw some of the companies like AbbVie, BP Midstream Partners will automatically reinvest because those are recent purchases. Other things like my other BP, my Shell, my AT&T, those are purchases that I've had for quite some time, and therefore I have it depositing to core account. There's a couple within there that I've selected now to, like Wells Fargo in particular, where the price is relatively deflated. It's in like the $46, $47 range. I think that's relatively cheap. So I said, hey man, let's reinvest those dividends. Let's get another share per quarter. Because if you think about it, I think I have 100 and some shares, maybe 200 shares, I don't remember. And basically you get about a percent in dividends every quarter. You get a 4 or 5% every year. So if you have 100, 200 shares, that's a share or 2 shares every quarter that you're reinvesting and automatically averaging down your position or also getting additional dividends. In this case, I think that Wells Fargo pays like 45 cents or something per share per quarter, just under $2 per year. And so if you're able to get that, then automatically you're going to be one share, or every share that you reinvest every quarter, you're going to get another $2 a year just from that share. And if you do that for the year, you're going to end up with $8 to $10 of additional income just from reinvesting that dividend. So it really sets you up on that compounding interest exponential curve if you haven't seen that before in the future. So that's relatively it. In this particular case, I'm just going to say deposit to core account. I actually will reinvest this one. It's relatively small position. It's relatively deflated in price, and we'll hit update, and basically here shows your confirmation that this is what you wanted. If not, you can just click on this, change it up, and that's what it is. But other than that, that's relatively it. There's really not anything too difficult about it, but like it says here, it must be received 5 days in advance of the record date. Otherwise, it might not happen until next quarter, so just keep that in mind. Probably because they have to notify, I guess, the custodian, which in this case is Fidelity, that you will be taking that money and automatically reinvesting it. I think it's a relatively cool thing to do. It has caused me to, I guess for an example, I purchased Stag Industrial, about $2,000 worth. I think it was like $1,900 worth or so back in 2015 timeframe, and I reinvested those dividends for quite a while. I think now I have about 130 shares of Stag Industrial. Let's just give it a quick look here. I'm sorry, 122 shares of Stag Industrial when I started off with 100 shares. So just from dividend reinvestment between 2015 when I purchased and mid-2018 when I continued to reinvest, and since mid-2018 I've turned off the dividend reinvestment. But just from that, I have 22 additional shares. And if you think about it, you're getting about 11 cents, 12 cents per share per month from Stag Industrial. So every share that you get additional, you're getting another $1.21 per year. In this case, since you have 122 shares, you're getting about $12 to $14 or so in dividends a month. So you're able to purchase another half share. So just from that, you're able to get another 50 cents per month in dividend income, which is absolutely phenomenal if you think about that in terms of being able to compound. And then you think about it, it's $1.50 every quarter. It ends up being, $7, $8, $9 or what have you for the entire year just by reinvesting on a monthly basis, which is pretty cool if you think about it. And I was doing that with my Realty Income Corp shares for a while. And if you think about it, if you start really doing this, like my Wells Fargo, like I mentioned, if I were to do that and reinvest it, I have 217 shares of Wells Fargo, each paying 45 cents a share. It ends up being a pretty big chunk of change. Let's double check. I think it's about almost $90, $100 every quarter that I get from Wells Fargo. So that's almost good enough for 2 shares. It's actually over 2 shares. And so that 2 shares is going to yield me, another $4 a year. If you think about it that way, which if you do that for a couple of years and every one of your positions is doing that, you really start to see the compounding effect. I mean, if you just take into account, let's just say the $8,500 I'm going to get in dividends this year, or I'm forecasted to get in 2019, and you're averaging about 4%, then I'm not very good at math, but what is that? It's like an extra $400 or $500 just by reinvesting those dividends. And if the dividend doesn't even raise the next year, then you're just going to reinvest that $8,500 at 4%, so you're going to get another $400 or $500, right? I mean, that's when you start seeing the compounding work. And if you end up getting, let's say, $100,000 in dividends a year, and you think about you reinvest that $100,000 every year, and you have 4% dividend yield on, let's say, your entire portfolio, that $100,000 reinvested is going to be another $4,000 a year. So now you went from $100,000 a year in dividend income to $104,000 a year, and that's before any dividend raises or anything like that. So anyway, just a cool little tidbit. Figured I would show you guys how to do that. Relatively easy. Hopefully, if you don't use Fidelity, use Schwab or E-Trade or Thinkorswim or TD Ameritrade or anything like that. It's relatively similar. Just, I would assume, go under accounts and trade or account settings and set that up automatically. Most organizations nowadays or brokerages allow you to do that for free. So just double check that. And I know Fidelity lets you do it for free for, I guess, stocks and ETFs. I'm not exactly sure for mutual funds, but just double check that you're not going to incur any fees by doing that. But other than that, hope this video finds you guys great. And if you have any comments, or if you liked the video, you didn't like the video, make sure you let me know with a thumbs up or thumbs down button below. And any comments, suggestions for future videos, leave them down in the comment section below. Otherwise, I will catch you guys next time. Have a great week.